Welcome, dear traders. It's me, Kate Stihina, and you're watching a recap of the Asian session. Yesterday, Wall Street saw a wave of a sell-off. Shares in Australia and Japan also dropped significantly. Stocks in New Zealand are at a two-week low. Apart from volatility, shares are unable to recover due to Cyclone Gabrielle, which battered the North Island with a strong wind and a heavy rain. A sell-off in the bond and futures market started yesterday after the release of a US CPI data. However, it did not have a great impact on the equity of the forex markets. Their reaction to the report was muted. As a result, the main event of the week did not stir up sharp volatility. Inflation has been sharpened for the 7th month in a row. As we predicted yesterday, its drop was rather modest. Instead of a decline to 6.2%, CPI stood at 6.4%. The Fed funds contracts were also adjusted. According to the CME FEDWATCH tool, the interest rate could be raised above 5.2% approximately in July. Until then, 3 more meetings will be held in March, May and June. US inflation reports continue to affect world markets. Although this is the data of a particular country, CPI is closely monitored by the Fed, and the regulator makes its monetary policy decisions taking into account this indicator. Other major central banks follow the policy set by the Fed. Fed policymakers' comments were also in the limelight. The majority of them backed further tightening. For example, Fed Board Governor John Williams said yesterday that inflation is still above the 2% target. Consumer prices remain high, so the Fed needs to raise the key rate further. However, Philadelphia Fed President Patrick Harker believes that the regulator is getting closer to having rates restrictive enough to return inflation to a stable level. However, traders have already heard such controversial remarks. They need more clarity to predict future trends. The US dollar rose across the board following inflation figures and the Fed's hawkish comments. However, there was one factor that limited its upside potential. The yield of a 2-year US government bonds again exceeded the yield of a 10-year Treasuries. This inversion occurs rarely and usually signals a recession. Thus, the US dollar is growing amid risk aversion, but losing ground due to recession fears. It appears that dollar bulls need more drivers. It's likely to retain its upward movement thanks to increased demand for safe haven assets. On a Wednesday morning, the US dollar was climbing in the intraday range of 103.20 and 103.60. It was trading steadily at 103.60 versus its main rivals. The yen was also affected by growing US government bond yields. Japanese government bonds are held near zero, and the dollar-yen pair advanced due to monetary policy discrepancies between the two central banks. In the Asian session, the yen declined for the first time this week. It reached a 6-week high of 133.30. Compared to other currencies, the dollar-yen pair was the sharpest one after the release of the CPI report. In the morning, the pair stabilized and it's trading more steadily now after the January decline. The pair was gradually drifting lower amid the ongoing correction, and the psychologically important support level is seen at 132.50. In the short term, the 133.50 level may turn into the resistance level against the backdrop of an uptrend. Commodity currencies also rolled back. The Australian dollar tried to retain an upward movement amid expectations of further rate hikes by the Reserve Bank of Australia. However, it edged lower due to risks of aggressive tightening by the Fed. Reserve Bank of Australia Governor Philip Lowe stressed that the regulator remains hawkish. It intends to cool demand in order to ensure a steady slowdown in inflation. Despite his hawkish remarks, US CPI data had a greater impact on the Aussie. It hit its intraday low, logging the first intraday decline against the US dollar in the last 3 sessions. On a Wednesday morning, the AUD USD pair faced a strong bearish pressure. It returned to the psychologically important level of 0.6900. After that, it slightly recovered to 0.6911. However, the pair was moving in the bearish corridor over 0.6895 and 0.6992. New Zealand is going through hard times. It declared a national emergency as Cyclone Gabrielle wreaked havoc across the country's North Island. So, stocks and the kiwi sank to their lows. The US dollar advanced the most against the Australian and the New Zealand dollar. The NZD USD pair slid to a low of 0.6300. Eventually, it fell to 0.6293. During the Asian session, the pair was moving in the downward channel of 0.6276 and 0.6340. It could face a strong support level at 0.6270. And that's all for now. Hit the subscribe button and have the latest market news at your fingertips. See you soon.